Good afternoon, and thank you for taking the time to review our performance this cycle. My name is Matthew Shikatano, and together with my team, we'll be walking you through our Board of Directors report for Neocycle. Our presentation will start with an overview of our team's roles and our mission as a company. After that, we'll cover our business plan going into the cycle and then move into our financial results and performance from Q4 through Q6. We'll explain the critical decisions we made each quarter, why we made them, and how those decisions will impact our revenues, expenses, our capacity, and overall financial position. From there, we'll highlight our best performing products and ads, and then outline our strategy going into Q7 and beyond. We'll close with the key lessons we learned throughout the cycle and how those lessons will guide our direction moving forward. Overall, our goal today is to give a clear, honest, and complete picture of how Neocycle performed, what we improved on, what challenges we faced, and how we plan to strengthen the company in the next quarter. Before we get into the results, here's a quick look at our team structure. I served as the President and the VP of Human Resources.
My name is Lillian Stewart, and I serve as VP of Marketing and VP of Accounting and Finance.
My name is Samantha Bishop, and I serve as the VP of Manufacturing and the VP of Marketing.
My name is Ronnie Walker. I'm the VP of Sales Management and the VP of Accounting and Finance.
And my name is Thomas Munley, and I'm the VP of Sales Management and the VP of Business Analytics.
Our mission is to make elite cycling performance accessible to everyone through sustainable, custom-fit carbon fiber bikes using innovative 3D printing technology.
And my name is Thomas Munley. This is page 6, an overview of our business plan. So we elected to focus on speed cycles and mountain cycles from pretty early on as we found more initial success, as well as in the graph you could see to the right, there's a lot more profit in the mountain and speed cycles. Additionally, our goal was to create high quality 3D printed cycles while staying at a reasonable price so that we aren't making anyone outside of the range of getting our product. And our goal was to keep production as low as possible, production costs as low as possible as we continued to grow so that we did not financially get behind the 8 ball.
So this is page 7, reviewing of the Q4 and Q6 financial results. We're first going to start off with the revenue growth. In Q4, we brought in a little under 1.17 million alone just in revenue. In Q5, it increased a little bit to $2.15 million. And then in Q6, our revenue nearly doubled again, closing at around like 4.07 million. This pattern tells us that we upgrade our products, especially for the Speed Cycle 2.0 in the previous slide, and in the Mountain Cycle 2.0 had a major impact on the demand. Another thing, Neocycle finally broke through a term for the market presence, and they finally got like real market share and capture. So for the operating expenses and cash flow in Q4, we struggled with high operating expenses. We ended it with around $2.1 million in losses about operating expenses. We also in Q5 made some adjustments which helped cash flow swing to a positive for around $82,000. And then in Q6, we saw a major improvement with the cash flow, with jumping to around $1.65 million. For our capital investment, throughout Q4 and 6, we continue investing in our capacity expansion. So in Q4, we had $720,000 invested. We actually took a little bit out in order to put back in for our company rebranding for the R&D and investments. Then pretty sure we put another $240,000 for Q5, which then helped jump back up to Q6, ending with $960,000. We also had a $2.5 million common stock in Q4 to strengthen our financial position. Our total assets steadily increased over all 3 quarters from quarter 4 and quarter 6. We started at 2.44 million in quarter 4, then it went to 2.54 million in quarter 5, and then it had a large jump from 2.54 to 4.09 million in quarter 6. It reflects a high inventory and great production capacity and has an overall business growth, which leads to our retained earnings. Although our retained earnings are still negative, we're improving every quarter. We went from 2.55 million in quarter 4 to 2.45 million in quarter 5, and then we closed it to around $920,000 in quarter 6. Overall, quarter 4 through quarter 6 illustrates NeoCycle's transition from early stage losses to scalability and revenue-driven business models. This results from the foundation for our strategy moving into quarter 7 and beyond.
Next is an overview of the key decisions we made in quarters 4 through 6 and their financial outcomes. This is slide 8. So starting with quarter 4, the most impactful decision that we made was investing heavily in the research and development for both our new 11-speed gears and the enriched carbon fiber material for the bikes. This R&D investment totaled 1.59 million in expenses, which is what significantly affected our financial statements. Our net income and earnings per share definitely dropped into the negatives, but this was a planned short-term trade-off to strengthen our product line in the future quarters. In addition to the R&D, we made several other key decisions in quarter 4. We updated advertising campaigns across all 3 of our product lines, opened our 4th retail store in Bangalore, and conducted additional follow-up market studies to better understand demand trends. Moving over into quarter 5, we began implementing the R&D from the previous quarter into our mountain and speed bikes. This came with another pretty major expense of about $509,000, which isn't nearly as big as the last quarter, but it did keep our net income negative. But the improvement from quarter 4 was so dramatic that we hoped investors could clearly see that NeoCycle was moving in the right direction, as both net income and earnings per share increased significantly quarter for quarter. We also continued to invest in the future by funding more R&D in quarter 5, this time focused on the mountain and racing tires, while also adjusting our advertising for our recreational model. Another important step was planning an expansion of our fixed capacity, and we purchased some additional 3D printers. Finally, in quarter 6, we saw all the payoff from these earlier decisions, and we implemented the new tires for the mountain and speed cycles that we previously purchased, making the products even more attractive within their segments to further expand market share in these areas and hopefully push demand for NeoCycle's products. Capacity expansion was another really major focus this quarter, and fixed capacity got increased to 88 units per day, and operating capacity increased to 52 units per day, ensuring we could finally meet the demand that we had been falling short of in previous quarters. Financially, quarter 6 marked a really strong comeback for us, thanks to over $2 million in sales in quarter 5 and more than $4 million in quarter 6. We were able to make these improvements without worry about financial strain. And by the end of quarter 6, we brought our net income back into the positives at 1.7 million and earnings per share up to $35. So overall, the decisions we made across quarters 4 through 6 set NeoCycle up for some long-term growth, stronger product competitiveness, and a more sustainable production capacity.
Now I will talk about the best products and ads for quarters 4 through 6, and this is slide 9. So it's very evident based on the images on the slide and our numbers that we performed extremely well in quarter 6, and this is due to the changes that Samantha and Ronnie and Thomas just talked about. All the investment in R&D really bumped up our demand, and it's all due to the design changes. Our Speed Cycle 2.0 and our Mountain Cycle 2.0 were our strongest performers in quarters 4 through 6. We made this change in quarter 5 and saw a drastic result because of it in quarter 6, a very positive drastic result. We decided to switch the gears to the 11 gear shift for the mountain and speed bike, and then we also switched to the carbon fiber enriched material, which is both stronger and lighter, so it's more appealing to the consumer. The cost to produce more of these units drops as our demand gets higher, So in quarters 4 through 5, we saw the mountain bike drop from $521 to produce to $473 to produce, and we saw the cost of the speed bike drop from $585 for production to $541. Even with the high cost of the R&D and the investment, because our demand became so high, we still saw a decrease in price. Because of this, our profit margin also increased drastically. We saw a 3% change for both the mountain and speed bike. Our quarter 5 profit was $396,000, and our quarter 6 profit for the mountain bike was 1.3 million, whereas our quarter 5 profit for speed was 583,000, and for quarter 6 it was also 1.3 million. Focusing a lot of attention on our ads now, we were competitive but not the top in quarter 4. But in quarter 5, our mountain ad had an ad judgment score of 79, which was first place. We were tied with 2 other teams, Smooth Rides and Urban Pedal, as you see in the image in the bottom of the slide. And we were ranked second for speed with a score of 72. We adjusted our ads slightly and kept them competitive going into quarter 6. Our ad judgment score for mountain remained at 79, which dropped us to second place, which was still very competitive within the market. And our speed ad dropped off a little bit, but we definitely performed the best in quarter 5. We were in all regions of the world, and we had 22 media inserts by quarter 6. And focusing on social media, which was a new addition into the marketing segment, we spent the most on social media than any of the other teams, spending $30,000. And I think this is a big contributor to why our demand was again so much higher than we saw in the previous quarters. On our ads specifically, we focused them on designing them to promote our brand name first. We wanted people to see the ads and immediately think Neocycle. If that's the only thing they took from them, at least it would be a name that they remembered. And then we really had strong descriptions of our bikes, really catering towards the target market and what they wanted. We're very proud and hope to see our demand continue to increase in the future quarters.
This is page 10. For quarter 7 and beyond, our overall strategy is to strengthen the areas where we underperformed in quarter 4 through quarter 6, while continuing to build on what worked well for us. Speed and mountain bikes were our strongest segments, and the demand for those products stayed consistently high. Because of that, we plan to keep focusing on those 2 lines and continue improving the specific features that customers value most, like performance and overall build quality. One of the biggest areas we identified for improvement is advertising. Our judgment scores and effectiveness were not where we wanted them to be, and that held back demand growth. So going forward, we're going to put a major emphasis on improving ad quality, clear messaging, and more accurate targeting, and campaigns that speak directly to the customers who are more likely to buy. Stronger market efficiency should help us convert more interest into actual sales. We also learned that pricing consistency is important. We kept our prices stable to prevent confusion and to hurt our demand. And moving into quarter 7 and beyond, we plan to keep pricing stable so customers see our products as predictable and reliable. Production and inventory planning is another key focus. In earlier quarters, we saw extra costs from overproduction in some periods and stockouts in high demand regions. Improving our forecasting and making smarter inventory decisions will help reduce unnecessary spending. Keeping our shelves stocked and making sure our most popular bikes are always available in the regions that need them. Overall, the strategy for quarter 7 is to tighten our marketing, strengthen product performance, and run our operations more efficiently. The lesson from the past few quarters is that high quality ads, stable pricing, and accurate production planning are all essential for driving growth. By focusing on these areas and doubling down on our strongest product lines, we're putting the company in a position to increase sales, protect profit margins, and improve our competitive standing in the next quarter and beyond.
And here's a couple of lessons we learned on page number 11. We found that the most important thing was a willingness to pivot and adjust to what the market gave us. For example, early on, we had a focus on recreational cycles, But after the first quarter of sales, we found that there was a bigger opportunity in mountain and speed cycles. So we slowly shifted and were able to capitalize on the what the market was giving us. Secondly, we found that the importance of marketing was we needed to have the ability to get eyes on our products, because early on our marketing was very ineffective and that negatively impacted our sales. But as soon as it became more middle of the pack, and then as it went on more effective than that, our sales just continued to rise. And then being able to meet the demand, we should have initially focused higher on increasing capacity, whereas we tried to keep our overtime as low as possible to reduce costs, but that cost us customers in the short term and in the long term. Whereas paying that short time overtime would have not had as big of a negative impact. And then the importance of communication. We found that being able to speak with one another and everyone properly get their ideas across and everything be thought of and thought out was highly important.
Thank you for taking the time and allowing us to present our performance and strategy. We've learned a lot this cycle, and we're committed to improving as we move into quarter 7 and beyond.